Look, I'm going to tell you something that's going to sound insane at first. There's a fifth stage coming in the silver market that nobody's talking about. Not the analysts on CNBC. Not the guys running billion-dollar funds. Not even the people who lived through 1980 when silver hit $50 an ounce and then crashed so hard it took 40 years to recover. And here's the thing that should make you pay attention. We've already gone through stages 1 through 4. Right now, in December 2025, we're sitting in the gap between stage 4 and stage 5. And if history has taught us anything, stage 5 is going to make the Hunt brothers squeeze look like a practice round. But before I explain what stage 5 looks like and why it's inevitable, you need to understand that silver isn't just some shiny metal people make jewelry out of. Silver is the most manipulated, most misunderstood, and most explosive commodity on the planet. And the setup we're seeing right now has never existed before in human history. Stage 1 started in 1999 when silver was trading at $5 an ounce. Mining companies were going bankrupt. Nobody cared about precious metals, and gold and silver were considered dead. But something changed. Central banks stopped selling gold. After the Bank of England dumped half its reserves at rock-bottom prices, the bottom was in. Silver began rising quietly $6, $7, $8, while smart money accumulated behind the scenes. Stage 2 hit with the 2008 financial crisis. Lehman collapsed, AIG got bailed out, and the Federal Reserve printed $4 trillion. Silver exploded from $9 in late 2008 to $49 by April 2011. It crashed afterward, yes, but stage 2 wasn't about the peak. It proved that when central banks print money, real assets respond, and silver responds. Stage 3 began in 2020 when the world shut down. Global central banks printed $18 trillion in 2 years. Silver rocketed from $12 to $30 in 5 months. This time, retail investors entered the arena. Wall Street bets piled into SLV and physical silver. Bullion sites crashed. Premiums hit $10, $12 over spot. It looked like the squeeze had begun, and then it fizzled. But that wasn't the point. Stage 3 showed that retail investors could actually move the silver market for the first time in history. Stage 4 is happening right now, and it's the most important stage because it's about fundamental supply and demand that can't be manipulated. Mine production peaked in 2016 at 900 million ounces and has fallen to around 830 million. Most silver is a byproduct of other metals. So when copper and zinc slow down, silver supply falls to. Meanwhile, industrial demand is exploding. Solar panels, EVs, 5G, electronics over 600 million ounces a year. ETF holdings total more than 700 million ounces locked in vaults and essentially removed from the market. Above-ground inventories are being drained. COMEX registered silver has fallen from 400 million ounces in 2022, 250 million today. At current depletion rates, COMEX could be critically low by 2027 or earlier. And silver still trades around $31. Everyone thinks silver is stuck, destined to move sideways forever. They're wrong, because stage 5 is coming and it will be nothing like 1980. To understand stage 5, you need the real story of the Hunt brothers. In the 1970s, Nelson Bunker Hunt and William Herbert Hunt bought massive amounts of silver as inflation soared and the dollar weakened. By 1979, they controlled 100 million ounces of physical silver, half the U.S. deliverable inventory. Silver surged from $6 to $50 in a year. The government responded. Rule changes, margin hikes, and Volcker's 20% interest rates crushed the squeeze. The Hunts went bankrupt and silver collapsed. But everything about 1980 is the opposite of today. Back then, global inventories were huge. The U.S. strategic stockpile held billions of ounces. India and China had massive reserves. When prices spiked, governments dumped silver onto the market and the squeeze died. Today, those inventories are gone. The U.S. sold its stockpile decades ago. India's silver is locked in jewelry and religious artifacts that will never return to market. China went from exporter to importer. Industrial demand is now structural. You cannot make solar panels or EVs without silver. There is no substitute at scale. Unlike 1980, supply cannot simply appear out of thin air. In 1980, retail investors had no coordination. Today, one viral post can mobilize millions globally. And unlike the Hunt brothers, the buying pressure today isn't concentrated in two people. It's distributed, decentralized, and impossible to regulate out of existence. ETF data proves the trajectory in 2022-2021. SLV alone absorbed 190 million ounces. That metal came out of existing inventories and hasn't returned. PSLV and other funds added even more. Every cycle locks up more silver permanently. Industrial consumption also keeps rising. Solar grew from 50 million ounces in 2015 to 150 million in 2024. EVs consume tens of millions of ounces. Electronics, medical tech, and infrastructure demand keep expanding. Production cannot keep up. We've been in structural deficit for 5 straight years. Above-ground inventories fill the gap, but those inventories are shrinking every year. This is the foundation of Stage 5. Stage 5 is the physical market breaking away from the paper market. The paper-silver market on COMEX is 100 times larger than the physical supply backing it. The system works only as long as few people demand delivery. But when supply tightens enough, the paper price and the physical price diverge. We saw a preview in 2022-2021 when physical silver sold for $10 above the futures price. That was a crack. Stage 5 is the break. Stage 5 begins with a trigger any one of several possibilities. A major mine shutdown, removing tens of millions of ounces from supply. Industrial panic buying from solar or EV manufacturers, a new retail squeeze, geopolitical crisis, or a currency crisis that drives people into hard assets. Any of these shocks could start Stage 5. The moment inventories get tight enough that COMEX cannot easily deliver, the system ruptures. Futures trade at one price, physical at a much higher one. The gap widens until the paper price loses credibility entirely. In Stage 5, physical silver is king. Industrial users hoard inventory. Retail buyers panic. Dealers run out of product. Premiums surge to $20, $30, $50. ETFs struggle to source metal. COMEX imposes emergency cash settlement. Governments intervene with restrictions and price controls. None of it works because the shortage is global and structural. Silver launches through old highs: $50, $100, $150, maybe more. Eventually, the spike overshoots and crashes because every parabolic move does it. But unlike 1980, silver doesn't return to old levels. The floor resets permanently. Maybe it stabilizes at $80. Maybe $100. But the era of $20, $30 silver is over. Because Stage 5 isn't a speculation-driven spike, it's a fundamental supply-driven reset. We are consuming more silver than we produce. Inventories are draining. Industrial demand is rising. Each cycle locks more silver into long-term storage. The math doesn't work. The system is tightening. The gap between paper and physical is widening. Stage 5 is where the math finally breaks the market. The only questions left are, when does Stage 5 begin, and will you be positioned before it does? Because Stage 5 isn't a possibility, it's a certainty. And when it hits, it will happen faster than anyone expects and harder than anyone is prepared for.